internal controls and do the sampling practice exam. We should finish this today. This chapter 7 handout we probably won't. Okay. So let's start with the chapter 7 handout. And we're going to talk about internal controls, and we're going to start out with kind of a one where we're somewhat familiar with, and that is the segregation of duties. And then we're going to get a little more in depth in it. Okay, so let's start out with this segregation of duties. I think we had this before. We talked about this. There are 3 duties we need to segregate. Custody of assets, authorizations, record keeping. There's a 4th one they sometimes throw in, and that's called reconciliations. Or review. Okay, I didn't put it in. But these first 3 are the ones that can really lead to a lot of trouble. If 2 of these are combined. So we're going to go through a few scenarios and see how it actually works out. Okay. I did. Amy is accounts receivable clerk. It was A, obviously. Amy's accounts receivable clerk in the mailroom, delivers the customer's checks to Amy every morning. Change this to Amy. Why I'm Mary there. All right. I'm sorry, change this to Amy if you would. We don't know what Mary did, but you gotta apply it. So Amy applies the checks to the customer's accounts. This is terrible. I don't remember doing this. The checks are then given to the cashier for depositing. Which incremental duties does Amy have? Okay, this is all about Amy. Okay, so Amy gets the checks, she applies them to the accounts, and then she gives the checks to the cashier.
A.
She certainly has custody of the asset, the cash. And does she have any other duty?
Would be C, record keeping?
She has 2 of them. So you'll notice what Amy could do. She could take one of these checks or more. Let's say it's for whatever, $500, and then she could keep that $500 and then go to that customer's account and give a credit of $5,000 or whatever it was. And then never give the check to the cashier, and the cashier would never know. So Amy should never get the checks. You never have accounting people get the checks. Okay. Bill, let me make sure Bill is all the way through here. Okay, I think he is. Bill is a customer service manager. Bill goes through all of the returned merchandise items and determines if any can be resold. Second. Sorry, I'm having a sneezing fit here. Okay. Why are you crying? It's allergies. Plus, I'm teaching about internal control, which will make me sick. Okay, Bill's a service manager. He'll go through all the returned merchandise items and determine if any of them can be resold. All as items can be resold into the inventory system, and the items are sent to the sales floor. Bill enters items that cannot be sold into the system as scrapped. Unsaleable items are disposed in the garbage. Which incompatible duties does Bill have?
A.
Yep. Any other ones?
Maybe B.
Yep.
Uh-huh.
And believe it or not, Bill also has C. He can enter inventory into the system or scrap it. So Bill has a lot. And so, this is one of those things you want to avoid. Yeah. There was actually a clerk at a Walmart that somehow had all these duties, and of course, the most loved person there, and she was friendly to everybody and all that, and she was giving off something, not a huge amount, but something like 5,000 a month, which is which is a lot. And he's not going to sing Walmart, but okay. Yeah, so and things like this, this kind of seems almost benign. And one of the things about internal controls is a lot of times people say, well, look, Bill's already doing this. Why don't you just have Bill entered in the system? Bill's the one making the decisions. Just have him enter the system. Why don't give it to somebody else and have them do it? And one person, they just do it, and we're not wasting a lot of time with this. Whereas actually you need 3 people. To do a task like that, to separate out those duties. And that's why sometimes these things don't happen, because internal controls are not always seen as efficient. Okay. Kathy works in the Treasury Department. Okay. She creates payroll checks every month and mails them to the employees. Kathy does a bank reconciliation for the payroll account every month and sends it to accounting. Which incompatible duties does Kathy have?
C for sure.
Yep, the bank reconciliation.
Mhm.
And
A.
Yep. She has the checks, which she's supposed to have. So the checks are fine. The Treasury Department deals in cash. They're supposed to run the payroll checks and stuff like that. They write checks. But the record keeping comes out of the reconciliation. Journal entries come out of it. So she should not be doing the bank reconciliation. Now, someone may in the past have said, well, this reconciliation, Kathy should do it because Kathy knows what, more about that account, which is probably true, but the bank reconciliation makes for journal entries, and that gives, Kathy custody of the assets and record keeping. So that's something you want to avoid. Okay. Dan is the accounts receivable clerk. Dan applies payments received to the customer's account and writes off uncollectible accounts. Which incompatible duties does Dan have, if any?
B and C.
Yep.
And A.
It doesn't say he gets the checks, though. Let me read it again. If he gets a check, certainly A. For some reason, I didn't put that in. But hopefully he's just getting a checklist. But he certainly has B and C. If he's getting the checks, he also has that.
So the write-off of checks is authorizations?
Yeah.
Oh, no, the write-off of the uncollectible accounts, it's authorization?
Yeah. And this is something that you should not let. And here's the. Give me 1 second here. So sorry, I'm sneezing like crazy. Yes, so authorization for writing off the uncollectible accounts. This is something Dan should not have. Now, you say, who should be able to write off the accounts? You know, that's an obvious question. It should not be anyone in accounting. It could also be almost be anyone other than the accounting.
Can an accountant does the record keeping, for example, along with
The record keeping,
assets?
Dan should definitely be doing the record keeping. This is the one that's really, you know, firstly, everyone should have one incompatible duty, but one incompatible, you know, there's nothing to be incompatible with. So if he was just doing applying the payments, you know, if you got a checklist and applying the payments, I'm going to change this one too. You know, he should be able to do the record keeping. That's his job. So everyone should have usually one of these duties. It's when they have two of them that they're incompatible. You shouldn't have two people have the same ones. Have two different duties. So running off the con is like, it's like anyone other than somebody in accounts receivable. It could be somebody in management. It could be you know, someone who is not associated with the process of putting the payments on the books. This should be a question. Could it be someone in treasury? Yeah. You know, it could be somebody, basically somebody who is not in this the record keeping should be authorizing those kind of things. And again, this is one of those things that is, you know, when it comes to internal controls, these are not always obvious. You know, this one, record keeping is fine. Authorizations, well, you can imagine somebody that, well, you know what, forgot the guy's name already. His name Bill, Dan. And well, why don't we just have Dan do it? You know, Dan does this all day long. Just have Dan do it. You know, that could be a very obvious thing, you know, for somebody, especially people in management who may not, you know, study internal control. Internal controls are really misunderstood, even among a lot of people, even in accounting, because you got to think kind of different, you know. And one of the big things about segregating these duties, and almost always when you, well, there's limitations on internal control, which I'm talking about. Yeah, that's not what I want. Almost always when you come and run into a problem, it comes down to this. You know, you have people with incompatible duties. Okay. So internal control, kind of definition kind of stuff. Okay, internal control is a set of policies and procedures. Now, this policies and procedures, this is kind of important, and I'll tell you why in a second. Relating to the operations, reporting, and compliance, management objectives, for the operations, reporting, and compliance. I'll talk about those in a second too. Okay, the big thing is that internal control is actually a process. It's not something that is put in place and then forgotten about. So it's policies and procedures. If people stop following the procedures, it falls apart. You know, if the policies are that somebody else authorizes the write-off accounts receivable, but someone gives those duties to Dan, you know, it falls apart. So it's policies and procedure. It is not an end. There is no, you know, perfect internal control structure that once you're done with it, you say, okay, we're done with that, and that's perfect, and we can leave it because it's ongoing. It's a process. There is no end to it. Okay, now operations. We actually have different audits for these different groups. Operations, we have operational audits. Reporting is what we're talking about, the financial statement reporting audits. Compliance audits are like IRS audits. They could be other audits too. But you'll notice that they kind of hit the three types of audits really you have. Operational audit, reporting audit, financial audit, like what we're doing. And then compliance audit, that would be like the IRS audits. By the way, you guys are gonna be accountants one day. You know what the worst part about being an accountant is? Tax season, because you get so many people in you stuff. You know, my desk here is filled up, you know, with tax documents. It's one of those inescapable things. Well, I did this. I sold the cabin in Michigan, and what do I owe, the tax I owe in Michigan on it? I don't know. You gotta dig through them all. Okay. Auditor responsibilities for internal control. Okay, this is sort of like, what is the external auditor? What are their responsibilities for internal control? Financial statement audit. Yeah, let's make that blue. Test relative and control activities. If you are relying on them, we talked about that. Test the controls. You only do those if you need to. Rely on the. If you're not going to rely on the controls, you don't need to do these. For a financial audit, no opinion on internal control. And timing, you evaluate the internal control throughout the year. And so let me explain that one a little bit. If there was a control problem in March, okay, now, let's say that there was some control that was not working or whatever, and maybe the client found it, and maybe they told you right away, hey, you know what, we just found out that this was happening, this control was not in place, and we corrected it now, so maybe, you know, for 3 weeks this control was not in place. You know, okay, thank you for letting us know. And you know, now here's the thing. A financial audit is basically historical in context. You know, what happened last year. So if there's uncertainty in part of that year, it can be a problem. Now, another thing about internal controls, and you know, if you think back about those incompatible duties we talked about, just because there's incompatible duties didn't necessarily mean that any of those people were doing anything wrong. You know, it doesn't mean that they, you know, embezzled millions of dollars or anything like that. It means that they had the opportunity to do something. It doesn't mean that they actually did it. So even if there is a problem in internal control, it doesn't necessarily mean the financial statements are misstated or that there's fraud or anything else. You know, sometimes there's people doing their job, even though they are doing more than they should as far as those incompatible duties. So internal control is a little bit tricky in that it doesn't necessarily mean that the financial statements are misstated. However, anytime it's happened throughout the year, it's a problem. So even if it's been corrected, it's still a problem because there's that period of time, whatever it was, where the control was not working. Okay, so we evaluate the effectiveness of internal control throughout the year if we're doing a financial audit. Okay, now auditors that audit publicly traded companies, issuers, are required to do an internal audit Let me see here. So this one up here is for issuers and non-issuers. But if they are issuers, they also have to do an internal control audit along with the financial audit. And the reason being is that the internal controls for, well, this actually came out of Sarbanes-Oxley. You know what's kind of funny? The people who wrote up Sarbanes-Oxley said, well, the best companies will already be doing this. Actually, no company was doing it. So the internal control audit is basically the company does an assessment of their internal controls. And then the auditors come in and they actually do an audit of the assessment itself. So they look and see what the assessment is. So they are required, though, to do tests of controls because they have to see if these controls they have are working. So publicly traded companies, you have a financial statement audit and then a second audit of the internal controls. So while you notice this one up here is they have to test the control activity only if they're relying on them. Come down here, they have to test every relevant control activity every year. So all the controls need to be tested. The relevant ones. They report an opinion on the effectiveness of the internal control. And this is a very forward-looking document because you'll notice that this is done at fiscal year end. In other words, if they had a problem throughout the year, but they corrected it at year end, it's okay. You're reporting on the internal controls as they are at year end. So notice the difference. This document's historical, going back a year. This document is sort of forward looking, saying, hey, at the end of the year, what were the controls like? This is what they were like at the end of the year. Okay. Let's go down here. A material internal weakness was discovered by a non-issuer client on August 5th, 2022. Let's make that yellow. The control weakness was eliminated on August 28th. So it was kind of year in which audits would be affected by this event?
The financial?
Yep, only the financial one. Good. You know, it sounds odd. You know, there's an internal control problem. It will not be in the internal control audit because the internal control audit is at year end. Tests of controls are required for the year-end audits of
Neither.
actually issuers. And this is only for okay, this is only for the audit of internal controls, not for the financial audit. The financial audit, they don't need to. So the financial audit, you don't need to do any tests if you're not going to rely on it. But for the internal control test, you have to test each relevant control activity each year. So while it's not needed for, oh wait, you're right. You're absolutely right. I misread the question. Take this back. Oops, I made it worse. Okay, you're absolutely right. Neither. This says financial audits. I'm sorry. Who wrote this thing anyway? Because they're financial audits. So issuers are only required to do it for the audit of internal control, not the financial audit. Very good. So financial audits, you're never required to do it unless you're going to rely on it. And because this is the financial audit, we don't need to. Okay, very good. Control environment factors. This is a way to remember it. This has been around for a while. The control environment is basically the environment in the client corporation. And a lot of times, if there are problems, it comes down to these things. Integrity and ethical values, commitment to competence. So these are kind of what they call tone at the top kind of stuff. And down here with the management one too. Basically, how the upper management does things affects everybody else. If the upper management is by the book, everybody else is too. If they're not, then nobody else will be, or very few. Big one, obviously here, assignment responsibilities. Board of directors is kind of an interesting one. Some board of directors are really good and take their, really seriously. Sometimes they're just kind of a rubber stamp. I worked when I was going through college. I worked at a bank for a while, and the board of directors was basically the bank president. Basically, ran the board of directors. He just basically told them what to do, and that was it. They really didn't have any oversight. Sometimes you'll get that, especially if you have a very strong personality at the top. A lot of times you'll have that kind of no one's going to challenge them kind of a thing. But sometimes the board of directors are very active. Sometimes they're very active in getting things done. They take their oversight very seriously. Okay, so anyway, these are, and you remember it by IC Hambo. And when you go in to take the CPA exam, it's done on the computers nowadays. What you'll be handed are two dry erase, like paper size, like a clipboard kind of thing. They're about the size of that piece of paper, and you have dry erase markers that you can work on, and you get two of them. And what I would encourage you to do is they have all your things that you memorize. So IC Hambo, right? IC Hambo, write in the thing before you even start the test. The reason you do that up front is when you start the test and you start getting into it and you can't remember exactly what you're doing, you do it when you're clear, right when you go in, when they start you off on the timing and whatever, take 5 minutes and write down all those things you have memorized. Those mnemonic things or whatever you have that you're gonna, how you memorize things, so that put those out, and that way you can keep referring back to those when you're taking the test. So something like IC Hambo, you write it down and put in each one, fill in what it is. Not extensively, but enough so when you look at it, so you read a multiple choice question or something like that, and they talk about which of the following is a control environment factor. You can look through that kind of see. Okay. One of those things is called PAPIs, or the old PIPs, and that is here. These authorization of transactions is a new one. And it's a new one. I'm not sure why. It isn't segregation of duties, but they broke it out as a separate type of control activity. Okay, so let's kind of go through the time is it. All right. Physical controls. Locking the doors. I'll give you these are examples. ID checks. Things that are physical, they keep you out, gates, things like that. Cameras. Hey. So, things like that. So physical controls are really just that. They're physical. They're what, that physically keeping people from doing things. Or only authorize people from doing things. Authorization of transactions is sad. Approving purchase orders. Approving receiving reports. Anything that requires an approval, obviously. So we're talking about here. And again, this one is included in segregation of duties. It's broken off separately now for some things. Performance reviews. Now, this is generally not a you're generally not for, well, employees are part of it, but I don't mean that these are not usually the year-end review for employees, but examples are usually, the big one is budgeting. These are kind of the big ones that you look at, budgeting and variance accounts. And you might wonder, well, how is that a control? It's a control because, for instance, budgeting. If they're buying something big, a big piece of equipment, a building, things like that, it should be on a capital budget. So a capital budget will have it. So if they have bought new things that are big and it's not on a capital budget, that's unusual. That's something you gotta look into. Why did they do this? It was obviously not planned for. So budgeting, like a capital budget, would tell you that. Operational budgets are also important because if someone embezzles money, makes an error, a lot of times they'll say, or something, a material misstatement, a lot of times that will show up in somebody's budget. So if you're working in the marketing department and there's a material misstatement in advertising expense, it's going to hit your budget. You're going to say, hey, how come this thing is off by, why is this off by 800,000? What is it? You go back and they'll find what it is. So budgeting is actually an internal control. Now, the budgeting to be effective, though, people have to be aware of it and comparing that to what the actual is. So if they're not comparing it, they might not catch it. But budgeting is actually a very important one. And quite honestly, in most businesses, it was kind of funny. I remember being at one of our assembly plants, and they would run off these budgeting things, of how well the different departments did every Monday. And they'd run them off in this big stack of things, this big sheets of paper. This is back in caveman era that I started. And it was kind of funny because you'd have all these managers in a single file line waiting to go up and look at what they're, you know, we're off by, we were off by what, you know, they were all, so they were actually looking at it every week. You usually don't get that, but anyway, it tells you though that, you know, that's what you want. You want to have people who are held accountable for whatever the budget is, because that's a control. So that if there is a material misstatement, it hits somebody's budget, they're gonna say something about it, whether it's fraud or an error or whatever it is. So this is a good one. These are good for catching material misstatements. Oops, not oof. Information processing. This is one we're all familiar with. Oops. We do it every day. Oops. So information processing, usernames, all that kind of stuff, but it also has things like things like input limits. For example, you know, you can be down to 0 inventory, but you can't have negative inventory. You can't have negative, you know, 10 bars of soap or something. So input limits, you know, are hopefully catching things before they actually go into the system itself. All right, segregation of duties we just did. And again, sometimes you'll see that authorization shown in there. Not usually, but sometimes, not the authorization. Sometimes you'll see this one in there too. The review and reconciliations. I guess instead of car, you'd say car, or really long time. But for these first 3 are usually ones up there. Okay. Yeah, we'll push on through. Auditor's understanding of internal controls. And we've already talked about these, I think. That you, by the way, you're required to get an understanding. So the understanding of internal controls, this is required. So notice that there's 2 different things here. Let me. So understanding internal control, you don't need to do any testing of internal controls. Okay, let me read these all. Okay, so to get an understanding of internal control, you do not need to test it. So if you're just getting an understanding of controls, you don't need to test them. If you're relying on internal controls, then you do. So if you're relying on internal controls to reduce your substantive testing, then you must do test of controls. So yeah, so in understanding, no test. Relying, then test goes are required. Now this one is, so this is not required. Scratch that, scratch that. The understanding of internal control is required, but the testing is not. Because you can get an understanding without testing. Relying on internal controls is not required, but if you do, then the test controls are required. I know it sounds weird, I'm saying this badly. So if you are going to rely on the controls, then you have to do testing. If you're not going to rely on the controls, you don't have to do testing. But you are required to get an understanding. And how do you get an understanding of internal controls? Ask people, inspect documents, see who's signing off on things, who's authorizing things, observe people actually doing their stuff. This is a very important one I found when I was doing auditing. It's amazing what a difference there is sometimes between what people think is going on and what it actually is going on. Not because they're being evil or anything, but just because it gets lost somewhere. And tracing transactions through the information system. So these are all ways to get understandings of internal control. But it is surprising that a lot of it is just talking to people. And when you kind of first start out, you talk to people, see what they think, see what their ideas are about the internal controls and all that. You might look at some of the documents. You generally don't test them, but you inspect them to see who's authorized, who's signing off on them and all that kind of stuff. Watching what people do and tracing transactions. So this is all for understanding of internal controls. And internal controls, you document them 3 ways. You can use any one of these. Or all 3 of them. The first one is internal control questionnaire. Second one is a flow chart. Questionnaire. Oh, I left off an end. Okay. The second one is a flow chart. Third one is written narrative. So you're going to you must use one, but whichever one you pick, that's all you need. Oops. So internal control questionnaire, a flow chart, and written narrative, and there are pluses and minuses for each of those. Which I'll show you next. Okay, internal control questionnaire. So here's what you do with the internal control questionnaire. You find somebody who's somewhat high up in the accounting department, usually. If you're doing publicly traded companies, a lot of times the assistant or associate controller is the person you talk to. Sometimes you get the controller, but a lot of times it'll be someone high up in the accounting department. Smaller companies will usually be the controller, and you'll go through and you'll read through this internal control questionnaire, and you'll ask them these questions. Generally speaking, a yes means it's control that's working. A no means it's a problem. Not always, but that it is a potential problem. It means that whatever that control is probably not there. So a lot of times, yes means good and no means bad. So, you're reading this off to somebody, you'll ask them, are all employees paid by check or direct deposit? So this is for payroll. So you probably find someone in payroll and have them, someone high up usually in payroll. And they'll probably be the ones you talk to. Is a special payroll bank account used? Are payroll checks signed by persons who do not prepare the checks and keep the cash funds in the accounting records? If check sign machine is used, are the signature plates controlled? Oh, I was in I was at an audit that this actually came up. I was doing an audit one time, and we were doing the initial walkthrough. You kind of have someone walking around the place, say, okay, here's where we do this, here's where we do that. It's just you kind of look around and see what's going on. But you're just walking through, and they're telling you, okay, this is where we reconcile these, this is where the shipping is, this is where, and we went into where they print the checks, and I'll never forget the check plates, with the signature on them. They were just sitting on the counter. As we walked in, and the guy that was showing us around was a head accounting person there, and he was, oh man, someone had left the check plates out. Now this was a treasury department personnel, so it wasn't really accounting, but he knew that, like, right there, that's an internal control problem where the signature plates laying out. Someone could just stamp on a check, and it's a problem with it. But anyway, signature plates on that. So you go through each of these. I'm not going to go through all of them, obviously, but you go through each of these, and they'll be testing for, usually something very specific as far as, these are some of the relevant assertions. And you go through there, and they'll say yes or no. Now, the good thing about internal control questionnaires, anyone so a pro is you take the pros and cons. So a pro is that anyone can administer them. It could be your first day on your first audit, and they can hand you the internal control questionnaire, and you go and here, go meet with Sandra's the one that does, you're gonna be talking to about this. Take this internal control questionnaire and go through these with Sandra, and you do. And it could be your first day on the first audit you ever had. So anyone can give these. There's a con though. The con is that everybody knows what the game is, and that yeses are good and nos are bad. So if you go talk to Sandra, and Sandra has a bunch of work she has to get done, and Sandra wants to just get rid of you, and she really doesn't care about the audit at all, what's Sandra going to do? Yes. Yes, we do all those things, so sometimes you can get that, people will know the game. So a lot of times what they'll do is they'll mix up the questions so that the correct answer is worked out to be a no. Make sure A, they're listening to it, and B, that, that they're not just basically trying to get rid of you by saying yes to everything. So there's the con to this is that usually everybody knows what the game is on those, and especially a lot of times in the publicly traded companies, you're probably going to be sitting across from somebody who came out of auditing. There's probably a 90% chance that whoever you're talking to was working at a CPA firm. And they sat exactly where you are sitting now, and they know exactly what the game is. So pros, cons. Yes, answers may not be correct. So when they say yes, it may not be an actual yes. Okay, so that's the internal control questionnaire. And these are some more of okay, this is a flow chart. So a flow chart is actually where you actually kind of give it as a sort of like a diagram of the flow of the various different types of approvals, the different types of documents, and that sort of thing. And there's little shapes that mean something, like these little, I don't know what they call these, four-sided somethings. Those usually mean there's some kind of an activity going on. So prepare the coalition, prepare the bank deposits, data entry, those sorts of things. So there's usually something happening. These little wavy things here are documents. So these are all documents. Yeah. So this is a flow chart. Good thing about flow charts is that for experienced people, experienced auditors can read them. So that's a good thing about flow charts. And they can read it, I should say, very quickly. I use flow charts when I first started auditing, I had no idea what they were or how to use them. But as I got more used to them, obviously, there's a beauty to them that you can really see things very quickly looking at them. And the last way, the written narrative, is just kind of what it says. It just writes out completely what it, what is actually happening. What are the controls? Now, the good thing about way up here now. The good thing about written narratives is that anyone can read them. So flowcharts are good that experienced auditors can read them very quickly. Written narratives are good that anyone can read them. If you show, if you show a flowchart to somebody who's not in auditing, this isn't going to make any sense to them. If you're not used to using them, this is not going to make any sense to you. When I first started, it didn't make any sense to me. So I wasn't in audit. I was in auditing. So there's a problem with flowcharts in that you can't show them to somebody. For instance, you can't take this to the cashier and say, "Is this right?" The cashier is going to say, "I never saw anything like that. I have no idea. What is it?" Whereas written narrative, you can hand this to the cashier and say, is this right? Cashier will say, yeah, well, this is right, but maybe not this, whatever. When I was auditing, I was doing internal audit. We had a lot more time than the external auditors. So what I would do, and I really found out that like going through the manuals, what was supposed to be happening was hopeless. It had nothing to do with anything. So, and by the way, one thing I should tell you though is when I got into auditing, a lot of these big companies had been downsizing for years, and a lot of times the downsizing didn't go very well. What I mean by that is there are a lot of things that, a lot of controls that were missing. So we were really focused on internal controls a lot when I came out of, when I started auditing. But one of the things that I like to do is to watch people, see what they're doing, and then start talking to them about what they're doing and put it into the written narrative. Now we keep handing the written narrative back to people. Say, is this right? And they say, yeah, this is right, but except for this part here, if it's like this, then we do this. Then so they make these corrections, and I'd make the correction. And yeah. And I take to the next person, and is this right? Yeah, that's right. No, except for this, we don't do that. But so you just keep going through and going through, and I would go through until I got that written narrative as perfect as I could get it, because anyone can read it, So I get that as perfect as I could get it, and then from that I would make the flow chart. So I would actually do both. I would do usually the written narrative. I didn't do every now and then we do some of the questionnaires, but for the most part, for what I was doing, I would do the written narrative, and then the written narrative, then I would make a very accurate flow chart that I knew was, pretty solid. But again, a lot of times the CPA firms, they don't have that luxury. They don't have the luxury to, to sit there for a day and a half trying to get this thing perfect. They have an hour or two to get that thing, get something together. So anyway, there are benefits to each one, and there's downsides to each one. The good thing about questionnaire, anyone can give it. Bad thing, everybody knows what the game is. Flow charts, good thing is if you're an experienced auditor, you look at it very quickly and figure out what's going on. And it's kind of a visual thing too. That if you're more of a visual learner, it's good for that. The bad thing about flow charts, no one else looking at it, hand that to a cashier, hand that to a sales rep or something, and it's not going to make any sense to them. So they can't help you. If you say, is this right? They'll just look at you and say, what's that? Written narrative is really good that everybody can read it. Everybody's on the same page. Some of the problem is that it requires a lot of reading and a lot of things that may not piece together exactly in an easy way. So like I say, when I did it, I would then break it apart and put it into a flow chart. But anyway, now you do not have to use any one of those, but you must use one to document your understanding of internal control. Okay, I've gone too long here. Let's see. Let's stop here. And we will take a break and come back at 7:12. And I'm going to pull up the next one we're going to work on. Next thing we're going to look at is the sampling practice exam. Okay. So the practice exam. So with the reason we're doing this practice exam, this is all stuff we've already covered. But I just wanted to kind of go through it and just to kind of reinforce it, because some of the stuff we did a while ago. So we'll kind of go through and refresh everybody, and then when we're done with the practice exam, I'll send out the exam. You know what? I might wait till next week. I already got an exam for you guys. We're getting close to the end here. I'll send it out tonight. Okay. So test controls, the department manager signs all purchase orders. They allow for an error rate of 6%. So that's the allowable rate. And the allowance for sampling is 3%. So whatever we come up with is going to be plus or minus 3. We don't usually worry about the minus, but we worry about the plus. Okay. So we have 300 purchase orders. And 285 of them are okay. 15 of them they do not have a department manager signature. So what's the error rate? Yep. So the error rate is 15 divided by 300 equals 0.05 or 5%. Now, we have this allowance for sampling risk, so it could be plus or minus 3%. Now, we're not too worried about it being minus. If it's lower than 5%, the actual error rate, that's fine. But if it's higher than 5%, that's the problem. So that's why we always add this. You know, this will be a plus added in, because that's the one we're really worried about. Is how bad could it be? What's the upper limit? Okay, so can the auditor rely on the controls? We have an error rate of 5%. But now this is a, it's kind of like that bell curve thing. Here's 5%, here's what our sample said it was 5, but it's going to be like plus 3 and minus 3. So we want to know what the upper limit on that is. What's the worst it could be? So we're going to add it to it and say, okay, 5 plus the allowance, which is okay. So kind of look like this. The allowance of 3%. Let's make this. I'm going to make these a different color. I'm going to make this one green. So we have an error rate of 5%. We have an allowance of 3%. So the upper limit is 8%. So can we rely on these controls?
Yes.
Actually, no. Because of this. The auditor allows for assessed level of control risk of 6%. So 6% is the max. I wish allows and allowances were so closely. So I should probably say tolerable rate is a better way to put it. But oops. Hey, come down here. Ah. Now, again, this is a sample. So it is possible that, even if you have 5%, if you subtract 3, it's possible that we could go as low as 2%. But the upper limit is what we're worried about. How bad could it be based on our sample? And the upper limit is 8%. We're not saying that it's necessarily 8% off, but that because this is a sample, it could be. So we would not rely on it. Now, you could take a larger sample and see if that error rate changes. And you get a more exacting number and you know which way this is going. And not only that, if you took a bigger sample, the allowances would shrink too, because you're more sure. The larger the sample, that if you just take a few of them, it's pretty wide. If you take more of them, that it kind of tightens up that thing, so the allowance would actually decrease too. But given the sample, whatever confidence rate we have, yeah, we would not accept it, because the upper limit, we found out that the error rate is 5%, but it could be off by as much as +3, 8% based on our audit. So we would not rely on it. Now, when you can't rely on internal controls, that just means you do more substantive testing. So it isn't the end of the world saying, oh, gee, this is terrible, because it just means you have to do more substantive testing. And as far as taking a larger sample, you might just say, well, it'd be just as easy to take a larger sample of substantive tests and do that rather than taking a larger sample of tested controls. So yeah, so that we would not be able to rely on it. So we'd have to increase our internal controls. Now, here's a weird thing about internal controls though. Okay, so we say that we can't rely on the internal controls. Does that necessarily mean the financial statements are misstated? The fact that we didn't have, we found 15 purchase orders without the correct signatures. Does that mean that the financial statements are misstated? C says, what's the misstatement on purchases? I mean, the fact of the matter is, just because they didn't sign it doesn't mean they weren't valid purchase orders. It just means they weren't following the controls. So it is possible that there's nothing wrong with the financial statement. So what is the statement of the purchases? It's unknown. So the amount of misstatement is unknown. We don't know if there is any misstatement. Test controls don't test for material misstatements. We just want to know if we can rely on the tests, if we can rely on the controls, I should say, to reduce our substantive testing. Now, usually you come up with a plan, you say, okay, we want to have 6% is our largest error error rate that we'll accept. And then we'll do substantive tests of 500. Now, if you can't rely on the internal controls, so these substantive tests, these are for dollar amounts. I don't know why I put the dollar sign in there. You guys know what the word dollar means. Goofy things they do. Okay, so some of those tests are for dollar amounts. Now, if originally we had planned, if we could rely on the controls, we would take 500. We can't rely on the controls. So are we going to increase it or decrease the number of items we take? So originally we were planning on doing test controls and relying on them. And by the way, the fact that they actually did the test of controls tells you that they did want to rely on them. If they weren't going to rely on the controls, they wouldn't do the test of controls. So they wanted to rely on them so that they could do a planned substantive test of 500 items. So are we going to take more, less, or the same 500 items? Anyone? Yep, pretty good. More. More items. So for example, I don't know. Oops. All right, so if we can't rely on the test controls, we go, okay, we can't rely on the test controls, so we have to take more of them. And whatever you come up with, you work out how many you need additional to get to the level you want to get at. So maybe you take 1,200 of them, something like this. Is this test required by the ACCT? No. Is only required it's only required if the auditors I should say relying. Rely on the controls to reduce no, it's not required. It's only required if they are relying on the test control. So if they're not relying on it, for example, they could have, before they even started this, they could have just said, look, forget about these tests of controls. Let's just take 1,200 items. So if they weren't relying on the controls, they wouldn't need to do this test controls at all. They're only doing it if they can reduce the amount of substantive testing. You basically only do it if you want to save money. That's really why, the only reason why you do it. If it's a publicly traded company, you have to test all the controls anyways. So if it's a publicly traded company, even though you're only doing the financial audit, you probably would at least try to use the internal controls too, because you have to test them anyways for the internal control audit. So you may as well just go ahead and do the test controls and see if you can reduce some of your substantive testing, but it's not required for financial audits to do these. So you can do a financial audit without testing the controls, as long as you're not relying on the controls. If you're relying on the controls, then you gotta test them. Okay. Classical sampling. Did you do this one? This one looks familiar. All right, well, anyway. So your accounts receivable, the book value is 380. We take a sample. Sample looks like that. Take 1,000 items. So the 800 of the 8,000 items, we take 1,000 of them. And we'll come up with an audit average. And a book average. Ah. He's not paying attention. Okay, so this is the audit average. I'm gonna put it just briefly. Okay, now by this point, you try to kind of, just looking at what it actually tells you to do as far as, for each of these three methods, how to project it over the entire population. So mean per unit, mean is just average. Okay, now, which one of these two averages is more persuasive to us? The one that we actually calculated or the one that someone handed to us? So is the audit average more persuasive or the book average?
Book.
Actually, the audit, because this is one thing to be clear when you're auditing, the stuff that you learn through your own doing, whether it's calculations or observing or whatever, is always more persuasive than what someone else gives you. It's sort of like someone telling you something versus you actually seeing it yourself. So your work is always more persuasive than something that's handed to you, which the client's financial statements, the client's book values, whatever it is. What you do yourself is more persuasive, always. So this number that we came up with, we're more sure of that number than what the client gave us. So we're going to use the audit average when we do our average per unit. Okay, so we're going to take the audit average. And we're going to say, look, everything you have here, you have these 8,000 accounts receivable, everything should match up to what, the number of countries. So everything should match. All those 8,000 items should be the same as our average. 400,000. Yeah. Okay, another little tip, turn the calculator on before you do calculations. 400,000. Okay, so this is our projected value. Okay, so now we have to figure out the projected misstatement. Excuse me. All right. Okay, so the projected misstatement is what, 20,000?
Understated 20,000.
Sorry, I'm sneezing my head off down. Yes, exactly. Yeah, you're absolutely right. It's understated by 20,000. You know, we're saying it's 400,000. They're saying it's 380. So they're understating it. Okay, now ratio estimation is basically saying that there's a ratio that these things are off by. It's basically saying that large things are off by large amounts and small things are off by small amounts, so that it's a ratio. Larger things will be off by more than smaller things. And so you take a ratio of audit to book. Now, if you forget which one goes on top, and this is one of the weird things about accounting, almost all the time the ratios are alphabetical. Audit over book, AV. So it's, you know, A is comes before B, so it's weird. Okay, ooh, no, not equals, I'm sorry. Times the book value. I'm just gonna take the 380. All right. Don't think that's going to be a nice number. I'm going to round off the nearest dollar, 395,833. $395,833. Okay, I think that's it. So this will be our projected misstatement. No, I said that wrong. I don't know what I'm doing here. Projected value. I took Benadryl, so I think I'm saying goofy things now. Okay, so. Oh, why? No. All right, so the misstatement is. I'm being, man, I was not paying attention. My apology. The heck of a review, Mr. Taylor, you didn't take it yourself. All right, so rejecting the statement is 13 or 15.833. Overstated or understated?
Under, I mean, yeah, it's under.
Yep, it's under. Yeah, they only have 380. We're saying it should be higher. Okay, and difference estimation. Need some more room here. Difference estimation says that everything is off by the same amount. Okay, so the difference here is $2. Now, is this an understatement or overstatement? Are we saying that each of these items are overstated or understated?
Under.
Understated, good. Yeah, they're saying they're 48, the average, we're saying it's 50, so these are going to be understated. Okay, now we're saying that every single item that they have is understated. So $2 times 8,000, 16,000. So this is actually projected misstatement. We're saying that every one of those is misstated by 1,600. 16,000. I mean, in total, 16,000. I'm gonna shut up here in a minute. Okay, and these are understated. All right, so the question is, what would the projected value be? If we're saying that it's understated by
396.
Yep. So this will be our projected value. This one's a little bit strange in that it is, we get the projected misstatement first. And it's also a little bit strange in that this one assumes that everything is. I guess we need that twice. Everything would be off by the same amount. So it doesn't matter whether the account was a $5,000 account or a $5 account, is off by $2. You know, the ratio one says big things off by big amounts. The difference one says everything's off by the same amount. You know what, we're gonna stop here. Let's stop here. There's no way I'm gonna get there's no way I'm gonna do the rest in 15 minutes. So we'll pick it up next time. There's no rush on this one. So.
Professor, can you change the due dates for this,
Yeah, let me take a look.
including the final, it shows this Friday. I could be wrong, but
Let me take a look.
I thought the test had the right date.
Chapter 5 and 6 exam. It'll be due this. Yeah, did I send that out last week?
Yes.
Oh, okay. Yeah, so that's due this Friday. The what do I have for the final? The last test we're going to do is the chapter 7. So that'll be yeah. So chapter 7. I might do a little bit of chapter 8 in there, but the chapter 7 one is going to be the last one.
that's right.
All right, well, let me change the due date on this then. This is absolutely not going to rework. Okay, so I'm going to change this to, it's actually going to go into May. Let me check down here. All right, so we're on the 21st. It's not going to be due on the 28th. It's going to be due on last week of class, May 5th. We're getting near. I think it was 5.8. 5.5. That makes a difference. Let me check and make sure that's right. And this one will get changed also. Yeah. Okay. Let me check and make sure that that went through. Okay. Yeah, so the last thing we're going to do is the chapter 7 handout. We'll finish up the sampling one next week and I'll send out the test then. I'm not sure if we'll finish all the chapter 7 stuff next week, but we'll certainly finish this practice exam. Okay. Question on that? So go ahead and nothing to turn in this week other than the test by Friday. And we'll continue with this next week. Okay. Question? All right. Have a good weekend. Or not weekend, it's a weekend. Have a good week. How about that?
Thank you, Professor.
Good night.
Good
Thank
night.
you.